2 years of employment is the industry standard for a mortgage loan, although, like with all rules, there are exceptions. A consecutive employment history with steady income reflects your ability to make monthly mortgage payments, and this is known as your ability to repay. But not everyone has a long employment history. Maybe you just graduated from college or university and you're starting your career, or you got laid off and recently rejoined the workforce. Fortunately, lenders do recognize these scenarios and have rules set for these complexities. Hey, my name is Leo with Home Alone, and this video will focus on what lenders look for when it comes to employment history. Stay tuned, and in the meantime, click subscribe and join the community, and hit the bell to stay tuned and updated on new videos. Lenders understand that someone who has less than 2 years of employment might still be perfectly willing and able to repay a mortgage. Maybe you're in between jobs, or you're starting a new career, or you have unconventional employment, such as being a contractor, or you're in the gig economy. Sometimes the lender will approve you solely on a job offer and a verification of employment from your future employer, especially if you're a doctor or a lawyer. Other means of qualification include liquidating assets or dividends and interest from investments, which should be of a significant amount if they're your only source of income. Alternatives include Social Security income, pensions or disability benefits, and even alimony payments are qualifying factors. In most cases, unemployment income is unacceptable, but there is an exception to this rule also, and that's if you're a seasonal employment, in which the borrower has a history of such scenario for a minimum of 2 years. The solution for all this is to find a lender or a broker who is willing to work around these complexities. Typically, lenders consider your last 2 years of employment, although they don't need to be with the same employer during the lapse of time. Generally, consistent employment in the same industry, if not at the same job, is all that's required. However, a long and consecutive employment history with many different jobs and a variety of industries won't help and will raise red flags due to instability. Lenders want to make sure your household income is stable and ongoing for at least the following next 3 years. Each mortgage loan program has its own requirements when it comes to employment history. Let's break down the employment history requirements for each major loan type, including conventional, FHA, VA, and USDA. For conventional and FHA loans, the borrower must have 2 years of employment history. And if a gap exists between jobs, a 6-month employment history at their current job is mandatory. Now, 6 months of unemployment is what defines a gap of employment. On a conventional loan for a borrower with a fixed income, it is generally required to have at least 2 years of relatable employment. However, less than 2 years is acceptable if the borrower demonstrates compensating factors such as education, which is almost considered work history, or a letter of explanation if you recently changed jobs or industries. If a borrower relies on overtime, commission, bonuses, a secondary or part-time job, or even self-employment income, the lender will likely require 2 years of employment history. Now, on a FHA loan, employment history criteria is more lenient. Although 2 years of employment history is required, previous history in the field of your current job is not mandatory. If an employment gap does exist, apart from the mandatory 6-month employment history at their current job, the borrower must show a 2-year work history before the gap occurred. Now, erratic job changes are acceptable as long as there is a tangible benefit or advancement in your career, such as higher pay, more responsibilities, or better opportunities in general. As with other loans, a 2-year history on overtime, commission, bonus, and secondary or part-time jobs and self-employment is also mandatory. Now, for a VA loan, although 2 years of employment history isn't mandatory, 2 years of relevant education or military service is going to be required. Even though the employment history standard of 2 years isn't mandatory, it's going to be a little tougher to qualify for without any previous education. Now, for active service members, the applicant must be more than 12 months from their release date. Now, on USDA loans have no minimum requirements on their current employment position of the borrower. However, 2 years of employment or related history is going to be required. Now, the applicant must provide a letter of explanation for any employment gaps or changes in industry or current job position stability at a new job. Also consider that the applicant's annual income cannot exceed more than 115% of the area's median income. These are basic guidelines for employment history on typical mortgages found in the market. Now, lenders might have overlays to these guidelines, and you should consult your lender or broker to better guide you through these loan processes. Now, if you'd like to have some examples of different employment history scenarios, comment down below to further discuss into detail. Now, make sure you like and share this video if you found it valuable, and subscribe and hit the bell to stay updated on new videos. Also, follow us on social media at HomeXLoan. And I'm Leo with Home Alone, and I'll catch you next time.